How would you like to invest in the stock market passively, yet be able to earn passive income reliably every single month? Well, that's the focus of this video. We're going to be talking about 13 high quality covered call ETFs that allow you to get exposure and invest in the stock market while also earning a passive income in the form of distributions, whether it's monthly for many of them, as well as a couple of them that have quarterly distributions. These distributions yield anywhere annually between 4.5% all the way to 12%. Yes, you heard it right. 12% annual distributions that is paid out to you either in monthly format or quarterly format. If that intrigues you, don't go anywhere and let's get into this video.
Everybody in the world is making money.
Before we dive into this video and take a look at the top 13 covered call ETFs, let's quickly review what covered call ETFs are all about. A covered call is an options strategy and is a solid way to generate passive income. A call is an option that gives the buyer the right to buy a stock by a certain date at a specific price. On the other side, the call seller, in this case could be you, is required to sell those shares at the agreed upon price. That is, if the buyer chooses to exercise their option to buy the shares. Well, you would be able to pursue option strategy yourself. It does involve education and doing a lot of reading and getting familiar with it. So why not try a more passive approach to that? That's where the covered call ETFs come to play. With covered call ETFs, investors don't have to learn all the details of option trading. The ETF does the work for them. All you as an investor have to do is buy the covered call ETF fund, and the fund manager enters into the covered call contracts for you. It's one of the best ways to profit from covered calls without having to buy the contracts yourself, which is why in this video, we're going to talk about the top quality covered call ETFs that exist out there. These include covered call ETFs that are both in US dollars as well as in Canadian dollars. So let's get into it. The first one to look at is Global X NASDAQ 100 covered call ETF with ticker symbol QYLD. This ETF is available in US dollars currency and has an expense ratio of 0.60%. In terms of assets under management under QYLD, you're looking at $6.14 billion, and it does pay you the distributions on a monthly basis. The distribution yield for QYLD currently is showing to be at 12.27%, which is just remarkable. QYLD seeks yield from the NASDAQ 100 via options premium. It earns income by selling call options and passes it on to investors net of fees. You'd notice that the inception date for QYLD was on December 12th of 2013, and the graph is showing you the stock performance for this ETF. You can notice that in the past 5 years, it is down by 11.14%. This does not take into account, of course, your distribution yield that you've earned year after year, in fact, months after months in this case. The second covered call ETF for us to review is Global X S&P 500 covered call ETF, the ticker symbol XYLD. XYLD is available in US dollars and has an expense ratio of 0.60%. In terms of assets under management, you're looking at 982 million, and the distributions are paid on a monthly basis. XYLD offers a new twist on an old strategy, writing calls against the S&P 500 stocks in order to earn the premium. The fund holds the underlying stock positions and writes 1 month at the money call options on the index. It was incepted on June 24th of 2013 and has a distribution yield of annual 8.29%. The stock ETF overall return shows up of 4.41% in the past 5 years. Next, we are looking at Global X Russell 2000 covered call ETF, RYLD. RYLD holds the Russell 2000 index while holding a succession of 1 month at the money option of the index. The fund follows a buy, write, or covered call strategy on the underlying index, and at the same time, the fund writes or sells call options that correspond to the index. It was incepted on April 17, 2019, and since that inception, it is down by 10.66%, but this does not indicate and include the distribution yield. Here you're looking at the monthly distribution with an annual yield of 12.01%. In terms of assets under management, we have 897 million, and the expense ratio for RYLD is at 0.60%. Next, we're going to take a look at a Canadian ETF. This is a covered call ETF in Canadian dollars with ticker symbol HDIV, or Hamilton Enhanced Multi-Sector Covered Call. It has an expense ratio of 0.65% and has a distribution yield of 8.08%. The distributions are paid on a monthly basis, and the fund seeks to replicate 1.25 times multiple of Solactive Multi-Sector Covered Call ETFs index, comprised of equal weightings of 7 Canadian listed sector Covered Call ETFs. HDIV was incepted on July of 2021, and since its inception, it is showing to be up by 4.6%. Next, we are looking at BMO Covered Call Technology ETF, the ticker symbol ZWT. It has the distribution yield of 4.59% and has an expense ratio of 0.73. The assets under management here is only at 18.7 million, given that this is a fairly recent holdings. ZWT, it was incepted on January 20th of 2021, and since then it is up by 4.58%. ZWT has been designed to provide exposure to a portfolio of North American technology and technology related companies while earning call option premiums. Next, we have another BMO related Covered Call ETF. This one is BMO Canadian High Dividend Covered Call ETF, ticker symbol ZWC. It does pay a distribution with an annual yield of 6.27% at this time, with the currency being in Canadian dollars. The expense ratio for this ETF is at 0.72%. In terms of assets under management, you're looking at $1.3 billion, and the distributions are paid on a monthly basis. ZWC was incepted on February 9th of 2017 and has been designed to provide exposure to a dividend-focused portfolio while earning call options premiums on the side. The underlying portfolio is yield-weighted and broadly diversified across sectors. Before we continue this video, I have a big favor to ask you. I've put a ton of time and effort, as you can see, to put this video together, and I appreciate it if you can give this video a thumbs up and subscribe to our channel. Thank you. Our next Covered Call ETF is BMO Covered Call Canadian Banks ETF, the ticker symbol ZWB, with a distribution yield of currently at 5.34% annually. ZWB is traded in Canadian dollars and has an expense ratio of 0.72%. In terms of assets under management, you're looking at 2.7 billion, and the distributions paid by this ETF are done on a monthly basis. ZWB has been designed to provide exposure to a portfolio of Canadian banks while earning call options premiums, and the fund invests in securities of Canadian banks and dynamically writes covered call options. The ZWB was incepted on January 28th of 2011, and the past 5 year, you're looking at the return of 17.97%, up positive for this ETF. The next ETF for us to look at is Horizons Enhanced Income Equity ETF, ticker symbol HEX. It is traded and available in Canadian dollars with a distribution yield of 5.26% annually. HEX has 24 million assets under management and does pay its distributions on a monthly basis. It provides unit holders with exposure to the performance of an equal weighted portfolio of large capitalization Canadian companies and monthly distributions of dividend and call options. It was incepted on March 16, 2011, and as you notice, the past 5 years is barely down by almost 0.14%. For the most part, it's actually stagnant and close to that 0% performance. But of course, it does not take into account your distribution yield and the passive income you earn through HEX. Next on our list, we have Horizons Enhanced Income Financials ETF, ticker symbol HEF. It gives investors exposure to an equally weighted portfolio of some of the largest and most liquid Canadian financial sector stocks listed on Toronto Stock Exchange. It then uses a covered call strategy to potentially earn additional income on the portfolio. It was incepted on May 16, 2011 and has $18 million assets under management. With an expense ratio of 0.84%, Horizons Enhanced Income Financial ETF also does pay its distribution annual yield of 5.54%. These distributions are paid in monthly intervals. Next, we are looking at Horizons Enhanced Income International Equity ETF, ticker symbol HEJ. It has a distribution yield of 5.14% annually. These distributions are paid though on a monthly basis, and you're looking at $10.5 million assets under management. In terms of expense ratio, you are looking at a fee of 0.84%. This fee indicates that if, for instance, you invest $10,000 into this ETF, in 1 year, you would be paying $84 in terms of the expense ratio or fee. This fund was incepted on September 13 of 2011. In the past 5 years, it was down by 18.8%. HEJ provides unit holders with exposure to the performance on an equal weighted portfolio of large capitalization international, non-North American companies, and monthly distributions of dividend and call options income. Here, by investing in HGA, you're kind of trying to stay away from the North American companies and more so focus on true international equities. Next on our list, on the 11th spot, we have CI Tech Giants Covered Call ETFs. This is actually Canadian hedged, and it's available on the ticker symbol TXF. These ETFs that we will look at from here onwards all have their distributions paid on a quarterly basis. This Canadian ETF is actually having an expense ratio of 0.65% and has a distribution yield at 8.69% annually. TXF provides unit holders through an actively managed portfolio with quarterly cash distributions and potential capital appreciation by investing on an equal weight basis in a portfolio of equity securities of at least 25 largest technology companies measured by market cap listed on a North American stock exchange. TXF was incepted on October 24th of 2011, and the past 5 years it was showing to be up by 46.3%. On the 12th spot, we have CI Energy Giant Covered Call ETF. It's hedged for Canadian dollars and is available with ticker symbol NXF. With an expense ratio of 0.65%, NXF does pay its distributions on a quarterly basis. It has 419 million assets under management and has an annual distribution yield of 8.48%. NXF is founded on February 4th of 2015, and in the past 5 years was down by 36.92%. It provides unit holders through an actively managed portfolio with quarterly cash distributions and the opportunity for capital appreciation by investing on an equal weight basis in the portfolio of equity securities of at least 15 largest energy companies measured by market capitalization listed on the North American Stock Exchange. Next on our list, and the final ETF to review, is CI Healthcare Giant Covered Call ETF. As the name suggests, it's in healthcare. It is hedged for Canadian dollars and available with ticker symbol FHI. It has an expense ratio of 0.65%. The distribution yield annually for FHI is at 7.73%. FHI provides holders through an actively managed portfolio with regular cash distributions and the opportunity for capital appreciation by investing on an equal weight basis in a portfolio of equity securities of at least 20 largest healthcare companies measured by the market cap listed on North American Stock Exchange. It was incepted on June 7th, 2018, and FHI is showing an overall return since then of 27.25% positive. It actually has 53 million in terms of assets under management, and as indicated, its distributions are paid on a quarterly basis. Well, thank you so much everyone for watching this video. I put a ton of time and effort for making this video together. I really appreciate it if you can give this video a thumbs up and share it with someone who might benefit from the video as well. And don't forget to subscribe to our channel. Here on Moementum Finance, we post every week several videos about investing, whether it's investing in the stock market, cryptocurrencies, and real estate, as well as ways to reach financial freedom. Thank you, and I hope to see you next time.